Now, we have futures initially down as the United States responded to all the attacks on the U.S. military over the weekend, military strikes on the Houthi rebels in Yemen. Markets were rattled by that initially with futures, and then we rebounded back up. And again, geopolitical issues, sometimes they rock markets for a little while. Other times they don't. Other times there's initially a knee-jerk reaction, and then the market ignores it. I think the market is bottoming in a bottoming process, and then I think it's going to go up about 15 to 20%. And I'll show you what I think is going on with that. The Dow was up 0.85%, up 353 points. The S&P was up 36 points, up 0.65%. The NASDAQ was up 0.31. The Russell was up 1.19%. The VIX was down by 5.78%. Now, the VIX was down more than 11% on Friday. It is predicting that because we had an update today, the VIX is predicting we'll have a down day tomorrow. At least there's an 85% chance we will, 15% chance that move will fail. Again, it is likely that we're in a bottoming process, and I'll show you in a second, that again is going to complete and take us much higher to new all-time highs. Again, the S&P 500 has either completed with the bottoming tail, the intermediate wave 4, or we're going to go just a little bit lower than that. I'll show you why I'm saying that with the count, but I think you got a bottoming process. You do have a bottoming tail here, but it needs confirmation by the end of the week. We'll be watching that, and then we need the RSI to get back above 50. We need to get this bounce off of the 50-week to reaffirm the previous bullish 50-50 signals. You got to get back above 50 on the RSI. I think you're going to rally back up into this channel. We have a channel here, and again in this larger channel, and I think you're going to get this 20% rally in all likelihood. Now, maybe it happens, quickly over the course of a few weeks on into, April maybe, or early May, or maybe this drags out a couple of months on into the summer. We'll see how it plays out, but this is what I think is happening. Now, I'm going to blow up this area for you right here, this ABC move, and maybe it's done, maybe it's not. I'll show you, and you can decide what you think. I'll show you the two options that I have. But again, I do believe that, again, this is a corrective move. I've been warning about a 20% crash to kick off the bear market. This is not it. In my opinion, this is not it. I believe this is the crash the volatility that comes, this little crash move that comes right before you get the bigger crash and right before the big run up to the final blow off top to shake out all the weak hands. That's what I think is going on. So again, I still think this is likely going to be the case. Again, I think is what's going to happen. You're going to have the Fed announce the end of quantitative tightening at this meeting. That's what I think is going to happen. I've been predicting that this would happen at this meeting. The market is going to go, oh, the Fed is stopping quantitative tightening. What is going to come next? Oh, more rate cuts and the QE. Market is addicted to the QE, okay? And again, they believe that it's bullish, and it's not. It's going to be bearish, because before you get the QE, you're going to get the rate cuts. You're going to get the jumbo rate cuts, and the Fed's going to panic, and the stock market's going to be in a free fall. And that's going to happen. So you're going to get the QE, but you're going to get it for the wrong reasons. Market will get what it wants. It will get, lower rates. It will eventually get more QE. That's what the Fed does. That's what they do. That's Keynesian economics that I talk about. It doesn't work. It makes things worse. You'll soon see that. So let's blow this area up here. But again, I just want you to know, again, three things that I'm looking for out of the Fed. Do we get a good number for GDP, or at least a positive number for the annual number? We'll be getting the Fed economic projections. Okay, that's market could rally on that and then shrug off the news. We got the revision of the GDP today, the Atlanta Fed. Let me just show you that real fast. It was at negative 2.4%. It had been as low as negative 2.8. It's now at 2.1. I told you this could get better, and even if it doesn't, and that was just updated today, but even if it doesn't get better, if the Fed still thinks we're going to have a positive GDP by the end of the year, the market may shrug it off, or this number may improve, and the market may applaud that. Three things I'm watching for. Do we see, what kind of number do we see from the Fed for GDP for 2025. We're going to get the projection for 2025 and 2026. Do we get, as I think that we're going to, get the announcement of the end of quantitative tightening? I think the markets will like that. Here comes QE. And then, that'll spark a rally, or maybe a post-Fed rally. Maybe it happens right after. Sometimes it works out that way. And what about the Fed's estimate for the Fed funds rate? It went from 4 to 2. Does it stay at 2, or do they pencil in another cut or 2 in 2025 and throw the market a bone? Do we get 3 cuts and the market goes, yay, we're going to get more cuts? And to price that in, we begin to price in more QE coming, more, rate cuts. But I expect that the Fed might, try to save the day and be bullish. But again, I believe we're in a bottoming process, and I'll show you there's 2 possibilities in my mind, and I'll show you those. But right now, GDP coming in better for the GDP estimate from the Atlanta Fed there. Let's take this chart and let's show you this up close on the daily and on the 60-minute chart. And again, looking for this ABC to now complete. Either it's completed with our bottoming tail last week, or we're going to go just a little bit lower and complete it. I'll show you, and what you think about this. Now here it is. Again, I believe that wave 3 completed over here. My other count just showed that. I think you have an ABC move for A right here. I think you got another ABC for B over here, the capital B you see right there. We turned off of this trend line right here. We had a failed breakout, okay, and then we had this move down. Now, the 5-leg push down could be complete right here with wave 5, and you're getting the 1, the 2, this whole thing's 3, 4, and then 5. And that could be done with our bottoming tail, and we rally back up, and we built upon that rally today. Okay, so that could be that the bottom's in with that bottoming tail. Very, very possible. And you got a nice looking channel there in the weekly time frame, as I showed you. But it's still possible that we get one more push down, and it could be that we have a 1, 2, and then I've marked the 3 right here at this low in blue, question mark. This is 4. And then we get one more push down. And that would mean that we get a divergence on the RSI in the daily time frame and on the Awesome Oscillator. That's what Bitcoin ended up doing. I don't know that we do that. We don't have to do that. The market followed Bitcoin down to the 200 period moving average. Bitcoin tested those lows. We had a couple of tests right here. Maybe that's all of it. We got these bullish divergences right here. But if we end up turning down one more time, you get the final flush out move, you could come down just a little bit lower. So just something worth paying attention to. Again, told you we're going to rally back up to towards the 200 over the weekend. And late last week, what's happening? We're rallying up towards the 200 in the daily time frame and rallying back up to our 50 period here. And again, in the trend line. So again, this is the scenario here. Do we have the bottom in with this 5-leg push lower? What do you think? Or do we get one more push down? We'll see what happens. Regardless which way it plays out, I think you're going to get a big rally back up and eventually come back and take out the February high. And again, I think you're going to start this 5-leg push higher. But did wave 4 finish here, or does it finish down over here with this blue count that I have right here? Bullish divergence played out on the MACD. We're now going in positive territory. If we can remain in positive territory, then maybe that marks a bottom. We'll be watching. But again, I told you I was looking for a bottom here, and then if you look at the past, this sell-off is a preview coming attractions, in my opinion. Again, this is what happens. You get the big run-up with the blow-off top, and then you get that 20% crash, and this you're going to see more distribution like this, and the distribution over here, and the distribution here and here. You're going to see more of that, and we have it further back, distribution going back, the July sell-off and the September sell-off. So again, this is what I think is happening. You're seeing the institutions selling into the rally, but they're going to run it up for the final climax run, I think, to finish the blow off top. So again, there's the wave count there on the 60-minute chart. I think you got a 5-leg push lower here. Is it done here, or is this wave 4 and we get it with one more push down? Regardless, again, I think you're in a bottoming process here. Very well could be in. Bottom could be in. There's that count on the daily chart. Again, 3 up there at the December high. Then we get the A, the B, the C. And again, is this done right here, or do we get one more push down and then get this big move up? I think you're going to be getting a big push higher. And remember, in 2000 and 2007, you had a 10%, 10.5% drop, and then you had a 12% drop in 2007, and it rallied up sharply 15% in one case, 17% in the other case. I think it'll be bigger than with this move because this is really the longest bull market in history. It's a very powerful, powerful bull market, and the AI surrounding it and everything else, all the hype and hopium. I think you're going to see this massive push up, and then I think you're going to see this 20% drop to kick off the bear market. But I don't think this is it. This, to me, looks corrective. So I continue to say that. It looks corrective to me. Now, maybe the bottom's here. Maybe we go a little bit lower, but I'm looking for a bottom here. And then I think you're going to get the run up. If we get another push down, you could end up or go higher. You could go higher and get the 4 up here and still push down. You could still end up forming this larger divergence or come up here even higher to the midpoint and the 50 level and form this larger divergence. That's what Bitcoin ended up doing. It doesn't have to. Sometimes they don't do the same thing. Other times they do. You just never know. But Bitcoin, I believe, has already bottomed. The S&P, well, maybe the jury's out right here with these two counts. Now, again, told you we're going to rally back up to that 200. What's happening? We're rallying back up to the 200 period. I told you that before this rally ever started there on Friday. I told you Wednesday, Thursday, we're eventually going to make our way back up there. We went a little bit lower on Thursday, and then again told you, we were going to rally up towards the 200 period moving average. That's what Bitcoin did, and then it stalled there and it pulled back. Do we do the same thing here? So again, maybe we bottomed and we end up getting a higher low and we don't get a divergence. We don't have to form a divergence, but we'll see what happens. It could. Same thing with the awesome oscillator. I told you awesome oscillator bars were going to go green. They went green today, daily time frame. So if 4 is done and we just blow right past the 200 like we did, when we rallied, we dropped below the 200 period in 2000 and 2007, but then we just had an explosive move right through them. Do we see something like that? Does the Fed spark a rally and we don't get any kind of really pullback and we just kind of play catch up to Bitcoin, which is trying to clear the 200 at this point? We'll see. I'm looking for a decisive push above that 200 period with Bitcoin. But again, it went to the 200, it pulled back, and then now it's flirting with it and it's trying to clear it. We'll see how it closes. You want to see my latest Bitcoin video? I'll link it at the end of this video, and you can see my amazing Bitcoin indicators. I believe that Bitcoin's bottom, the market will follow. So again, we got the bottoming signals. Now momentum's turned back to bullish with Bitcoin. Now we need to see the trend signals turn back to bullish. And if we see that happen, again, the S&P and the NASDAQ are going to follow suit. But right here, again, this trend line, we're likely going to go back and test it, a Fibonacci retracement. Maybe we get another push lower before we do it. Maybe that's it. And, we start the blast off here. Going to come back up here and everybody's going to go, oh, that's it. It's a back test. It's a back test. And you're going to hit a Fibonacci retracement. You'll stall there and they're going to say, that's it. That's it. You're going to test a 50 and stall at the 50, just like what we did in 2000 to 2007. That's why I keep showing you those charts. That's the blueprint of what's going to happen. We're going to blow past the 50 period moving average and go take out the February high. And again, I think you're going to get an explosive move higher, probably by at least 20%. Maybe 17, but I think it's going to be even bigger than that. I think it's going to be towards that upper channel, which could take us towards about a 20% rally, maybe a little bit more, if in fact we're completing. But this does look corrective to me, as I continue to say. And I think that, again, people are telling us, like the rally we're getting right now, we're told that wasn't going to happen. There's no possible way that's going to happen. We've been told we're all going to die now. And again, I think that you're going to see a massive short squeeze, and the herd was bearish down here. They weren't bearish at the tops, but they were bearish down here. So I think, again, you've got a bottom. Bears are telling us we're all going to die, and there's no possible way we're going to get a rally. And then when we get it, when we go back up and get it, then they're going to tell us, oh, it's a back test, it's a back test. And they're telling us right now it's not going to happen. Over social media. I think Bitcoin. I think S&P's bottoming. I think Bitcoin's bottoming, and I think you're going to get back above these 200 period moving averages and get an explosive rally higher. I think S&P's going to go up 20%. I think Bitcoin's going to go up about 75, maybe 85% from these lows. But then I think we're going to top, and I think this is just a preview of coming attraction. At least that's what's happened in the past in the overall topping process, as I've talked about. Please support the channel with the link directly below that allows me to be able to provide you this information. If you like the charts, you like the indicators, let me know that by supporting the channel today. If you could take a moment to do that, I would really, really appreciate it. Just follow the link below. It'll take you to a secured site. You can donate any amount you want. I just ask that you do what you can to help out, because I don't want to sell you stuff. I don't want to come on here and sell you all kinds of stuff and get sponsors. They contact me all the time. They email me all the time. And I turn all those offers down because I don't want to sell you things. I don't want to make merchandise of you. And there's a lot of shady deals on the internet anyways. We'll sell you gold and only charge you 3 times the commission. Or all these, sites that want you to buy stuff that you don't need. So again, if you like the charts, please take a moment to support the channel. It'd be very encouraging to hear from you. Look, again, I told you, we've had the red bars. Told you we had a failed breakout up here in the S&P 500 above the previous peak. We got the reversal of conditions. We're still below the 10-period moving average. We've rallied back up to it. We halted right at it. We tried to get above it, and we stalled right at it, right there. Told you we were moving towards that 200 period. We're doing that right now. So again, you got the green awesome oscillator bar I told you to be watching for. We got it. But the MACD, it's not gotten a bullish cross. The risk is that the awesome oscillator and, we get a green bar or two and then turn back down, and that we see the same thing happen with the MACD. It ends up forming a divergence, and maybe the histogram goes positive, but then it turns right back into the negative territory and we get a divergence on the MACD. Bitcoin did do that. I don't know that the S&P will. The S&P doesn't have to do it. The S&P might just get awesome oscillator bars that go into positive territory and never look back. When we dropped below the 200 period in 2000 to 2007, we had an explosive move right through that level, went up. And if we do it, we'll go to the 20, and then we can go back and get some kind of pullback. It could happen that way. And again, that's what I'm saying. It's very possible we have bottomed. If we can really get above the 200 period, then you got a good shot that that's the case. So we'll be watching. But you still have red bars reflecting the trend. You got to be able to clear the cloud up here, getting above the 5750 area, really to flip that around. So we'll be watching to see if we continue towards the 200 or fall short of it, but we've rallied up to just under it so far. That's the high right there, if you can see it, which I told you was going to happen, which we've now done. So we'll be watching to see what happens. But you could still get a divergence here on the awesome oscillator. We'll be watching to see how this unfolds. You got to get bars back to blue. You got to get the cloud back to green. You got to get the awesome oscillator green and in positive territory to turn this around. So we'll be watching. But eventually, I do think we're getting back above that 200. I told you we would rally towards it. We are. The question now is, did the 5-leg push lower finish here? Did we get one more push down here or go up to the 200 and get it here? We came up towards it. We may fall short of it, but I told you we're rallying towards that 200 period. Bitcoin tagged it and pulled back. We'll see what happens with the S&P. And then if the S&P does stall at the 200, do we pull back? Again, surprised to see the Fed announce the end of quantitative tightening. That will help with the economy, help with the herd going, quantitative easing's coming. It's the way they think. We'll be watching to see how. And people tell me, already topped and all this stuff, and this is start of the bear market. Well, we haven't even stopped quantitative tightening yet. So I think that you got to do that. And then I think you get another pause out of the Fed. And then again, eventually later on, you're going to see the Fed panic, and you're going to likely see the emergency cuts and have them start cutting aggressively. That's what they always do every time, because they never see the recession coming, because they're a bunch of Keynesians over there and they're blindsided to it. Don't believe the recession indicators. I happen to believe them. I also believe that this isn't the top. And again, those have remained bearish. They're likely going to flip back to bullish. We're going to go back up towards that 50, probably stall there. And then again, what if we just blow past the 200, or if we stall around the 200 and pull back, but you're going to that 50 eventually. And the 50 period moving average, you're likely going to see it tested, stall out at a Fibonacci in that area, and then pull back, and then we're going to blow past it and go up and just catapult through the February high. That's what I think is going to happen. I think a top is going to happen, and then you're going to get it. It's going to be followed by the 20% crash. S&P daily here. Green bar on the awesome oscillator showing up. The rally back up towards the 200 period that I've been warning you about happening. That bottoming tail. This is the spiders. We got that bottoming tail with the hammer at the 50 period moving average. And again, we're trying to get above that 50 period, but you still have a reversal of conditions in the weekly time frame. I think you're going to see, again, one final push higher. And again, that could take a couple weeks. That could take a couple of months. We'll see what happens. Get the MACD firming back up here. But I think you're going to bounce off these 50-week moving averages, Bitcoin, the NASDAQ, the S&P. I think you're going to see it happen. And then I think you're going to get that final blow off top. And with the NASDAQ, I think the MACD will firm up here. I think the oscillator will eventually turn back up. And again, could we get a confirmation to our weekly bars this week with the Fed if they stop quantitative tightening, or pencil in another cut or two, or again positive GDP, hopes of positive GDP for the year, whatever the case may be? Do we get a confirmation and a pushback above that 50-period moving average here on the NASDAQ weekly chart? I think that's likely going to be the case. And NASDAQ is at the trend line from the 2022 low. We breached it ever so slightly. Thing here, you're getting the oscillator bar. You had a failed breakout above the December peak. We talked about that at the time. We got the reversal right after that. Reversal of conditions, red bars, red cloud, all the way down. You're getting the green oscillator bar, again, stalling at the 10-period moving average. Again, do we end up forming a divergence and going and taking out the slow ever so slightly and forming a divergence and then get a rally back up, or is this the bottom? And again, I showed you with the S&P, we got the same situation with the NASDAQ. Again, we've rallied up towards the 200, fallen short of it here, still may reach it as Bitcoin did, but we'll be watching for more green bars, and that could take us closer to that 200 period. Then we'll be watching what happens with the Fed. We initially get volatility with the Fed, but then rally after them, or did we get a big rally with the Fed? We'll be watching to see which way it plays out, but you get a rally today. Warning you, we can get a big rally this week. Told you we can get a rally on Monday, trying to move towards that 200-period moving average on the S&P and the NASDAQ. Now look, here is, if this low can hold, we've dropped 10.5% right here on the S&P. If this low can hold and we get back above the 200 period, go back up a test of 50, it's in the golden pocket at the moment, okay? So if we get a big explosive rally quickly, you're in the golden pocket. 58.94 is the 61.8 Fibonacci, 78.6 Fibonacci, just above 6,000. Okay, so if we rally back up to that level, you likely stall. Or again, if we're not done yet, we'll be watching to see if we stall under the 200 to go back and test the low here. But you got a shot of a bottom, and if you do, and get it back above the 200, you headed towards the 50. I think the 50 will prevent it from getting a bearish death cross with the 200 period moving average. Go up to the 50 like we did in 2000 and 2007, stall at the 50, pull back, and then explode higher. I think you're moving to this trend line. If we come into contact with it quickly, we'll have a lower percentage return, and that's why I'm saying 15%. Right in here would be 15. I think it's more like 17 to 20%. But if we take our sweet time getting there, it could even be higher. As I pointed out, the rallies in 2000, it was less than a month, the 17% rally, and the rally in 2007 took about 9 weeks. It was just under 2.5 months, about 9.5 weeks or so. So again, go longer. Maybe this drags out into going into, late May or on into the summer or something. But again, this is where I think you're going, is to this trend line, which is the upper boundary of the channel in the weekly time frame. And I want to repeat, I think we're going to move at least 15%, if not 20% higher, probably somewhere between 17 and 20%. And if we take our time reaching the trend line, then again, could even go higher than 20%. But this is what happens. You get this preview of coming attractions with the volatility, and then you go up and make new highs. And again, you're going to see sentiment likely quickly change. We can get a Fed rally, or if we start seeing some progress made with the negotiations with tariffs delayed, or good tariff news, as I've been saying, whatever the case may be. What about, a ceasefire with Ukraine and Russia? The market could celebrate that. Again, I'm just telling you, I think you got a good shot that we're completing the wave 4 or about to complete it, one or the other, and then we're going to get this explosive rally higher. But then the market's going to top, in my opinion. We just had the uninverting of the yield curve last week, and we don't even have quantitative tightening yet. So I still think we have more time. Usually when you get the second inverting of the yield curve and it uninverts, again, you buy a little bit more time before the recession starts. But before that recession starts, the market's going to rally, and it's going to likely peak just before that recession starts and begin to price it in. And that's when the Fed's going to panic. So I think this is not the 20% crash kicking off the bear market. I think it's the sell-off you get right before the big run-up, which is what we've had before, and I've talked about it at great length and detail. I think we've got the same thing going on with NASDAQ. Now, again, NVIDIA's the question mark, because if it can't make new highs, does NASDAQ end up diverging with it, or does NVIDIA make new highs and so does NASDAQ, or, again, does NASDAQ end up diverging with the S&P? Again, the bearish count would be that we completed the peak right here, that you've got your top in. I don't think so. I think I think we've expanded and broke this trend line right here. And again, we're bouncing off the other trend line with our linear scaling. Here with the log scaling, we broke the trend line, and I think you get this beautiful channel. So I think you're going to get this big push on higher. You're going to get this massive negative divergence. And then again, it's going to really lull people into a false sense of security if we start going to new highs. And again, people will get bullish sentiment real fast if we get a powerful rally back up. But this is what I do think is happening with NASDAQ. And again, I think we completed 3 over here. We're getting 4 either wrapped up here with the bullish hammer, or we go a little bit lower. But I think you still got a pretty good shot that we've got a bullish, a bottom in with the bullish hammer, as I said over the weekend. But I wanted to present that other Elliott wave count to you with NASDAQ and S&P, because we still may try to take it out. But you got a bullish hammer. We'll see if it gets confirmed, as I think it will, before the weekend. So I think that's likely going to happen. That's why I'm saying we could just blow right past the 200 period on the NASDAQ and the S&P 500. That's certainly what happened in 2000 and 2007. You got a rally that was explosive, that got right back above those moving averages. I think you can see the same thing here. So again, this is my channel here on the NASDAQ. And again, trend lines change all the time. They expand. So again, we're being told there's no possible way we're going to rally back up right now. This rally right here, it's just a little counter trend and we're going to keep going. And again, I'm telling you, we're likely going to get an explosive rally back up, even if we dip a little bit lower and to finish the way forward. If it's not yet done, I think you're going to get an explosive move higher on the NASDAQ. That's the way the bull markets usually end. They end with these powerful moves higher. Sometimes NASDAQ can diverge with the S&P. So again, I'll be watching this closely, but I still think they can go higher, and then they may diverge once they make new highs. NASDAQ may peak first, and then S&P after that. Same thing with the NASDAQ as the S&P. Again, we had this little tiny bullish divergence develop right here. Very tiny little bullish divergence right there. And again, Bitcoin did that with this first low. Does the NASDAQ end up coming back down and testing that low for larger diversions? That's certainly possible. You know, if we go higher to the 200 period, do we come back down and go closer to the 400 period, or just undercut this level just slightly? Could be, but it is possible that it is done as well. Same kind of count as I showed you with the S&P 500. We've come back to fill the gap over here from the election. NASDAQ never did fill it. We're going to be watching to see if we attempt to get back above that 200 period, or if we test this level some more. But again, be watching to see if we can blow past these 200 period moving averages. If you do, then again, that would really suggest the bottom is in. And as we rally back up, we'll be looking at Fibonacci retracement. So we'll be looking at the broken trend lines, because we're likely going to rally towards the cloud and towards the 50 period moving average and towards our Fibonacci retracements. And then probably stall at the 50 as we did in 2000 and 2007, and then blow past it. But I think is likely going to be the case. Again, I think this move is corrective. It's a little closer. You can see the 100, the 50 up here by the cloud. And then again, if we have a bottom here at the Fed pivot gap, I think I said election earlier. It's the Fed pivot gap. We already did the election. Then again, we'll be looking for a test of that 50 once we get above the 200. But I think you're going to see a powerful move. You know, we broke out of these downward trends in the 60-minute time frame. We had the bullish divergence here, and you had it on the MACD here on the NASDAQ 60-minute chart. So again, we're coming up to the cloud here. Again, we got the gap filled directly overhead, and that's near that 200 period moving average. So we'll be watching the gap fill directly overhead on NASDAQ. But again, we've broken down, we've broken out of these trend lines. We gapped higher, and again, these divergences here, little tiny ones in the daily time frame. Maybe that's all she wrote, but Again, we still may get one more push down, but again, I think we're in a bottoming process. Had a breakout. We're above the 50, 50 still below the 200. So even if we get a powerful rally back up quickly, move above the 200 and start moving towards the 200 here in the 60-minute time frame, start moving towards the 50 in the daily, again, you're likely going to get some volatility, but we may see a very powerful rally and blow past those 200 period moving averages. That is what happened. Dipped below them in the daily time frame there in 2000 and 2007. It did the same thing after a sharp decline, which we've just had of 10.5% on the S&P 500 and a little bit more than that on the NASDAQ. I talked about the S&P moving and back to this trend line right here. And we have the trend line right here, and we have the gap fill up here, and we have the 200 period moving average. So again, I'll be watching the trend line, I'll be watching the 200, I'll be watching the gap fill on the S&P 500. We've had the bullish divergences begin to play out. Again, do we get one more push down, or is that it? Just start seeing an explosive move higher, or push higher and get a pullback and then still go higher and have the low hold. We'll be watching. Bottoming tails last week, you got a good shot that we have the low in, but I wanted to show you alternative count on the S&P on that other 60-minute chart where we get one more push down, but this very well could be the completing of the 5-leg push lower here. The wave of speculation. Sometimes, again, there are periods of uncertainty with it. We'll see what happens here.